recording. Happy FOMC to all my Inner Wealth subscribers and supporters. Thank you guys for tuning in day after day, week after week, recording after recording. I appreciate you guys so much. And guys, I mean, here we are. If you've been following along, which I highly encourage you guys to do, follow along, turn on your notifications. I will be posting. There's no set schedule. I tried the set schedule, that didn't really work out. It will be more random calls, but they will be weekly. I promise you guys that I will be putting out weekly calls. Okay, so I would prefer if you guys followed up with every single one, and then back test everything with current price, right? Because that's the luxury that some of you have versus those who are catching the recordings years from now, is while you guys can follow up with the price action that we currently have, guys. So we've been looking at this low for a while, right? Been looking at this low all week. This was our weekly objective. We did achieve that today, right? Awesome. So now I want to bring your attention into this area. We do have a bullish breaker here. I want to see what reaction we get out of this breaker. The breaker is the last push. Bullish breaker is the last push up before the sweep that took out liquidity. Okay, that took out a previous low. That push up, that is the breaker candle. So we did trade into that area right here below our internal liquidity level on the weekly. And so this is where this gets interesting. So once your targets get hit, what do? Me personally, when it's a major liquidity level, I allow price action to develop first before jumping into a bias or in front of a bias, right? So that's really what I like to do, is before jumping onto a bias or attaching myself to anything, I would rather price action let me know if we want to go a little bit deeper or we want to just leave from here. For me, I want to see some accumulation, but you guys know that I don't just look for straight up mitigations. I want to see liquidity within that mitigation. So my eyes, one second. My eyes currently go here below that low to potentially accumulate and move to the upside. Right? So DXY was beautiful. We were anticipating shorts, and here they are. So because we were anticipating shorts on DXY, of course I was anticipating longs on the dollar, on Dow Jones. Dow Jones being one of my favorite assets. JK, it's my favorite asset. Here we go, from that top to that low to that high that swept all this liquidity to the low that took out all that liquidity, right? We have our range 50% and above. We have this imbalance, and we did trade it to 50% and above. But not only that, what's internal liquidity? 50% and above. Notice how we took out that previous daily high, and we didn't trade into that imbalance that I was mentioning, boohoo, and we did sweep internal liquidity and come into this bearish breaker. Bearish breaker, vice versa from the bullish one, is the last push down before the move up that took out a previous high and created a new low. That is a breaker. And the ABCs of Smart Money Concepts playlist, you guys can find this video when I go in greater detail into this. Okay, so we sweep liquidity into it just like we do on DXY, or what I'm expecting on DXY, right? And we just dip down. So now I'm looking for these lows to get hit, right? These are my new objectives for the week. I don't think they'll get hit this week. We have another 2 days, but for now, that's my overall objective, is to make it down there. So pretty bearish on the DXY now after we tapped into that. But the move into that, guys, I was just walking price action up for our higher high, previous higher low, right? Looking at the fact that we had swept this, and let's go over here to the 1 hour. We had already taken that previous daily high, but one thing that seemed unlikely is the fact that we didn't just reject to the downside with some imbalances. So to me, I wanted to see one more push above that, right? And so this previous low right here is our internal liquidity from this low to that high internal liquidity right here. I didn't want that low to get taken, which is London's low, right? So now going into the 30-minute, you guys can see this beautiful bullish breaker right here. Boom, the last push up before we moved down, swept the previous low and created a new high, right? We have this beautiful bullish breaker right here. And so again, you guys know I don't really like to just see a mitigation out of these areas, but I'm not gonna lie to you, I did get clapped. I did play the shorts right here. I did get stopped out at the open. I played these shorts right here. We took them, right? And then it came back, hit me out of break even, and then it fell some more. And then I believe it fell to my target, but it wasn't until after I was done trading for the morning. So that was, it took place without me. Oh well, I love it when my targets get hit, even if it's without me. Okay, we played around with that previous daily high. Look at that, hit that level perfectly, reject to that internal liquidity level, and then we get this nice push to the upside, and there you have FOMC, right? I actually had this journal just like this. I had this journaled just like this to see what kind of reaction we would get in FOMC, and I'm super happy that I journaled this, because even though I did not trade FOMC till afterwards, I wasn't part of these longs, it's a amazing feeling seeing how often, more often than not, your biases are correct and your targets get hit. That is feedback that even if you're not trading, right, that analysis is active feedback to tell you whether you're doing something correct or incorrect, right? That push up for FOMC gets us into that breaker. Then we get a nice impulsive move to the upside, right? And then after, this is where I personally got in, and I guess today is going to be more about breakers because you guys will see what happens next. We have this imbalance here, back in premium, 50% and above. We have this imbalance. Remember a whole range right there. All right, 50% and above is premium, which is this imbalance right here. Then you also have this breaker, the last push down before we get that move up that swept the previous high and created a new low. The only times you guys will see me take a candle over the open of the imbalance is if the open of the imbalance is inside the candle. Stop loss above the high of the imbalance, and I just took it like this. I'm with a broker right now that does not allow you to hold past the close of every single day, so I close my trades at the end of every single day. This right here was enough for me. I was super content because, write this down, you do not need the entirety of the move to make money. I promise you guys that. That's just some false news that somebody was spreading around or something, that you need to catch the baddest trades, the best risk to reward, the best this, the best that. Like, guys, you guys have seen me take the same trades again and again and again. 1 to 3s, 1 to 4s, 1 to 5s. Nothing crazy, nothing extreme. Sometimes I'll take like a 1 to 10 or above, but that's rare. For the most part, I'm stacking up on these 1 to 3s, 1 to 5s, 1 to 4s. Like, I'm stacking up on them. I let the compound effect do its thing, right? So guys, I want you guys to take notes of these. Back test the breaker, because it's something that we're going to be playing with a lot more. Going to be showing you guys a lot more of these things. Back test the breaker, back test the news, document your before and after. At first they may not look the best, right? Or maybe they do, but what matters is what you learn from it. It doesn't matter if you catch the trade or not. It's what you learn from it to eventually, somewhere down the line, position yourself well enough to where you can participate in these moves, okay? But it's not going to happen on your first FOMC, right? Be patient. Like, none of these things are to be rushed. They really ain't. None of these things are to be rushed. Just imagine you're going to be trading for another 5 to 10 plus years. 5 to 10 plus years. Why are you rushing yourself now? What's the point in rushing to that destination now? Let it come to you, right? You guys know that affirmation. It's very well known. Money comes to me and flows through me, right? It's not that I'm gonna get to the money fast. No, the money's gonna come. Money, my partner told me this, and it's probably the most profound thing that anybody has ever told me. So simple, yet I remember about it every time that I'm stressing about a trade, or every time that I'm stressing about money and finances, bills, or whatever. Anytime that this one thought corrects everything, and it's money comes and money goes. If your goals and time is all being devoted to money, just know that it's gonna come and it's gonna go. So that you stressing over it right now isn't serving you or anyone ever, because money will come and money will go. Right? I'm gonna leave you guys with that note. I appreciate you guys tuning in. Thank you guys for, again, like, supporting. Let me know down below if you took any trades during FOMC. Let me know what pairs you guys took. I want to see what, you guys' charts. You can drop your trading view link, whatever. But show me what you guys take. Show me what your guys' markups are. I want to see you guys on Twitter. Follow me on Twitter at inner. Okay, I'll tell it to you guys right now. Okay, it's on the link below. Either way, on the link below, but it's inner. Okay. /wealth, right? And so I want you guys to follow me. I'm actually just gonna drop the link below. I don't think I said that correctly. So I'm gonna drop the link below. Follow me on Twitter, talk to me, guys, and I will catch you guys soon on the next one. All right, make sure that you're subscribed and you turn on your notifications, because there may be more price action this week that I put out content for. So I'll see you guys on there. Take care and peace.